What a week it's been. Tesla shares were dropping like crazy, then they went up. On my manual account, I loaded up on Uber and Snap, and as soon as I bought in, everything tanked. Okay, let's summarize this bearish week. In the fifth week of the man versus bot race, where we both started with $59,000 at our disposal, the winner by a landslide is the bot. Zero emotions, it just did its job. As you can see, it had its breaks because Tesla was falling. When it bounced back, the bot slowly collected cash. Last week I changed the parameters. Now it performs operations less frequently and is still stuffed to the gills. This week I'll slightly adjust the settings to make its entries and exits more precise. Okay, back to the numbers. The bot earned $2,763.51 more than I did trading manually. It's nearly 5% better than me, and this is only the fifth week, of which I spent over 2 weeks turning it on and off to fix bugs, so it's actually a result from just 3 weeks. I'm slowly starting to wonder if I should just hand over my entire fortune to the bot. The bot's portfolio value is $60,275, while mine dropped a massive amount this week. It's now at $57,511. On the value over time chart, because the period is still too short, there isn't really a dominant lead yet. We'll see in a few months who pulls ahead and who gets left behind on the platform. The daily volatility chart. I need to think about this one. IBKR settles operations using FIFO, but the bot adopted a LIFO strategy. It sells the most recent transaction at a profit, while keeping track of which shares it needs to sell for a gain. IBKR logs the oldest purchase first, which is why in the broker's books we have a tax loss, even though we actually received cold hard cash into the account. Someday I'll make a video about the difference between FIFO and LIFO. Let me know in the comments if you want that. Now for position management. The bot only holds Tesla shares and juggles them hands-free. Once it accumulates 100 shares, we sell a covered call. Currently, there are no open options because the last one expired yesterday, on Friday. The manual account is currently a picture of tragedy and despair. Nearly 45% of the capital is in Uber shares, which, as you can see, are significantly in the red. All shares are underwater except for Ford, for which I'll receive an additional $30 dividend in March. I'm trying to cover all my shares with covered call options to average down the purchase price. By buying 100 shares of a company at $100 per share and then selling an option that expires worthless and gives me a $100 premium, I lower my initial cost by $1 per share. This allows me to exit underwater positions with a profit sooner. That's why I have so many options open. The downside, I have to spend a lot of time on it and track the premiums manually to avoid mistakes. In terms of time, the bot wins. This week it looks like a passive income machine. Let's look at the statistics. The bot versus man comparison shows similar data, yet the bot proved to be nearly 5% better than the manual account. Commissions are similar. Win rate and stock P&L are distorted because of the difference in how the broker calculates shares, FIFO, versus the bot strategy, LIFO. That's why next week I'll refine the app that generates this summary. Option earnings are similar, but the management is completely different. The bot issued 3 options, while I issued dozens. The bot wins here too. The biggest win in this case is the premium amount the bot collected for a 2-day option with a strike price of 432. In both cases, we see that both the bot and I have a positive profit factor. The bot is at 1.8 and I am at 11.07, meaning for every $1 risked, I had $11.07 in profit. I'll work on the bot's profit factor, but once I adjust the script to account for LIFO, I'm sure the data will look much better. IBKR shows a tax loss, but the bot generated more free cash than I did manually. Coming back to averaging down the purchase price with option premiums, I wrote an additional function that pulls data from IBKR and calculates how much the shares actually cost me after subtracting premiums and dividends. This table shows exactly where I stand with my positions. For example, Uber. I bought 330 shares at an average price of $79.47, but since the purchase, I've received $363.81 in premiums, so my real average is $78.37. Selling Uber now at $79, even though it's lower than the original price, I'm already in profit and can escape an unwanted investment. Of course, I'm counting on a big move up for Uber and won't exit at 79, but this premium averaging makes it possible. I'm also wondering if I should factor in potential taxes here. Since I earned $363 from premiums and we have a 19% tax in Poland, should I average my price based on the net amount? But maybe we'll talk about that in the next episode. We have 31 subs. Thank you all, we're growing stronger drop by drop. I hope this channel will soon become more active and together we will hack Wall Street. Hear you next week. Give a like and sub. Hack the planet.